Ethan just got his first job, and payday is coming up, but there's one small problem. He doesn't have a bank account yet. He starts searching for options, but with so many choices, it's a little overwhelming. If you've ever felt this way, don't worry, you're not alone. When it comes to managing your money, you've got a few different options. Let's take a look at the main types of financial institutions. First, we have traditional banks. These are large, well-known institutions with many branches, a wide range of services, and both in-person and online banking options. Next, we have credit unions, member-owned organizations that often offer lower fees and a more community-focused approach. Then we have online banks, which have no physical branches, but typically provide lower fees and higher interest rates. Finally, we have Indigenous financial institutions that are specifically designed to support Indigenous communities with tailored financial services. Each type of institution has its advantages. If you like going into a branch and speaking to someone in person, a traditional bank or credit union might be your best bet. But if you prefer handling everything on your phone and want lower fees, an online bank may be the way to go, as they sometimes offer lower fees and higher interest rates. It's all about what works for you and what you're getting out of it. Now that Ethan knows where he might want to bank, he needs to figure out what kind of account he should open. Let's break it down. Checking accounts are great for everyday spending and transactions. Think of it as your go-to account for paying bills, buying food, or withdrawing cash. Saving accounts are designed to store money for future goals and often earn interest over time. Debit cards let you spend money directly from your account, while credit cards let you borrow money that you need to pay back later. Mobile banking makes it easy to access and manage your money online, while in-person banking allows you to visit a branch and speak with someone directly. Ethan realizes that having both a checking and saving account could be a smart move. It lets him manage his spending while also setting money aside for future needs. Ethan decides it's time to open his first bank account, but what does he need to bring? Here's a quick checklist. To open a bank account, you usually need a government-issued ID, like a birth certificate, passport, health card, or social insurance number, your SIN, a proof of address, if required by the bank, and a parental cosigner, if you're under 18 and the bank requires one. Once Ethan's account is set up, he finds out about direct deposit, an easy and secure way for his employer to send his paycheck straight into his account. No paper checks, no waiting in line at the bank, just money showing up when it's supposed to. It's safer, faster, and way more convenient, which is why most employers prefer it. To get direct deposit set up, Ethan needs to give his employer some key details: his account number, transit number, and branch number. These can be found on a void check, a direct deposit form from his bank, or through his new banking app. With direct deposit ready to go, Ethan can focus on what to do with his paycheck instead of worrying about how to get it. Ethan wants to make sure he's making the right choices with his money, but when he searches for advice online, there's so much information out there. Some of it is helpful, some of it not so much. So how do you know who to trust or what to trust? Here's what to look for reliable financial advice. Bank representatives and financial advisors. They can provide expert guidance, but they might also promote their own institutional services, so take what they say with a grain of salt. Online platforms. Websites, blogs, and videos can be great resources, but always check their credibility. Cross-reference with trusted sources like the government financial education sites. When looking up financial advice online, ask yourself, is the site giving you useful information or just trying to sell you something? Articles that can only promote one product or service might be biased, especially if they're sponsored by a company trying to make a sale. Friends and family. They can offer helpful personal experiences, but their advice may not always be the most up-to-date. By checking the sources and making sure he's getting unbiased advice, Ethan feels more confident in his financial decisions. Ethan now understands how to choose a financial institution, pick the right account, and find reliable financial advice. He's taken an important step towards managing his money, and so can you. Your financial journey starts now, so ask yourself, what's more important to you in a bank account?